Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Market 5. I'm your co-host, Joel L. Connon, and on the line I have Andrew Keene, and he is founder of Keene on the Market. He is also author of Trade to Win Using Unusual Options, Volatility, and Earnings. We certainly have a lot of that going on. How you doing this morning, Andrew?
I'm doing pretty good. We see the futures, off a little bit. And I continue to reiterate the fact to my subscriber base that, I think we're completely overbought up here. If you look at the way the S&P 500 futures, which is, one of the key metrics of the stock market, has been trading, we are up about 200 points in the last 10 days. It seemed like we were falling off a cliff.
Okay, Andrew, we're having a little problems here. Sounds like, are you back? Okay, we were talking to Andrew Keene on the markets. He seems to be getting a little bit of adjustment on his microphone, so we'll wait for Andrew to come back. In the meantime, here S&P futures are trading down 375 at 207 even. Just made a low 2,450, getting a little bit of a pop. Mid-range on the day is 2009 and a quarter, and we have a double close here at 2011 and 2011.50 represents the all-time high here. Joe, do we want to try and bring him in again, or just
We're trying to get him back on the line. I'm not quite sure where he went. Yeah, it's ringing.
Okay.
What's up?
Hey, Andrew. Okay,
Can I call you on a different number? That'll be easy for me.
Yeah, he can do that.
Okay. All right. We'll let you hang up, and Joe will hit you that number, and we'll wait for you to call back, Andrew.
Can you just email me that number? It might be easiest.
Okay. Sounds good.
All right. Thanks, bye.
Crude staging a little bit of a rally here. We did hit 75.84 earlier this morning, now rallying back here. Let's take a look at that crude trade here. Crude is trying to rebound now, nearly $2 off that low. So a lot of volatility in the crude market this morning. Looking at the only thing that's green, not the only thing, but green on my screen is Apple here. Made a new all-time high yesterday. Also had an all-time closing high for Apple. Stock's been on a march. Did get over the 110 level in Monday's trading. All-time high close 109.40. The high from yesterday 110.30. A lot of times Apple will hit an area and test it once or twice, as you can see going back in this recent run. So really no clear resistance up to 110.30 here in shares of Apple. Joe, how we doing?
Waiting for him to call back.
Okay. All right. Also, let's just take a quick look here at Alibaba that was trading. Had the earnings today. Nice earnings. Had some pops and some drops. Let's take a look at the intraday trading here. Now trading in the red here. I did notice on the pre-market chart you were running into some problems at the 102 level. The all-time high close in Baba 101.80. Over the last hour or so, you have found a seller in the pre-market trading at 101.85. So 101.80, if you do get any kind of more of a rally here, be keeping an eye on that all-time high close in Alibaba at 101.80. We just got some earnings on sale here. SALE.
That is Retail Me Not.
Retail Me Not?
You like that? You like that company name?
Yeah. What do you got for me?
All right, so they reported. They actually reported after the close, right after the close last night. They reported Q3 seeing EPS of 16 cents versus an analyst estimate of 13 cents. So better there on the bottom line. Sales coming in also better, 56.5 million. Street was looking for about 56 million. and the company's guidance they offered for Q4 was not so hot.
And once again, guidance rules the
That's
day
right.
here. Quick drop here in the stock, and then it just tried to catch its breath at the $16 level, rallied up to 16.50, and now we are making new lows as we speak right now, just making a trade at 15.30 here on some significant volume. Going back in October. Now, this was ahead of when the market washed out. When the market washed out, you had a low at 15.55, also 15.17. But it looks like the true support in this thing, and not sure if we're going to get there today. Back on October 10th, October 13th, had lows at 14.44 and 14.58. So if the carnage continues here, we'll keep an eye on those levels. That was some earnings from last night.
Yeah, and then if anyone's trading that this morning, heads up, Goldman did downgrade the stock from buy to neutral, so that is also going to be hitting the stock this morning.
Okay, another stock that has made some earnings news last night, Office Depot.
Okay, ODP. I was worried that you didn't like the tickers that I threw in there, Joe, but I'm glad you did. Let me get you those Office Depot's numbers real quick. Q3 EPS 10 cents, beat by a penny. Sales also beating 4.07 billion. Street was looking for about 4.05 billion. I don't remember any guidance crossing there, but let me just check to confirm. Not seeing any. Actually, it looks like they did raise their operating income guidance
Okay.
on
This is
ODP.
Andrew.
Hello, Andrew. How you doing?
Good, how are you?
All right, we're back with Andrew Keene here on Benzinga's Pre-Market Prep. He's founder of Keene on the Markets. Now, before we got interrupted, you were talking about you really have tried to maintain your bullish thesis on the market, but now at these elevated levels, you're having a little change in sentiment. Would you like to elaborate on that?
Yeah, I mean, if you look at the S&P 500 futures, and I watched them trade, for an extended period of time, they're open 23.25 hours in a day. And, I just think there's going to be a lot of overhead supply up here. And when we usually get to levels where we've seen before, historically using technical analysis, we see a lot of sellers that are people that are happy they're back to break even. And I think the market should, sell off from here. I'm not going to get aggressively short the market until we break to about 1990, 1995 in the S&P 500 futures. But I have been leaning a little bit to the short side, and it actually hasn't been hurting me that much because I'm very stock specific. I don't want to be long any oil names whatsoever. If you look at the way the charts look, use unusual option to activity plus the chart. And the oil names have done really well this year. National Oil Vol, a Devon Energy, Valero, but right now there's no interest in me getting long. So from my point of view, for the first time in over 3 years, I'm looking to actually get short a little bit, and I've been playing to the short side, and it hasn't really hurt me. I bought some Schwab puts yesterday that are working out. So I'm not aggressively getting short, but this is the first time where I think that the market's completely overbought. 9.7% correction from high to low. I find it hard that we would take out the all-time high and continue to rip through the end of the year.
Yeah, I was thinking about that too. Last night when I was looking at looking at some of the charts, and you're thinking, well, 1813 with the SPOOs hit, maybe a little undervalued there, and then boom, now we're right back 200 points higher, maybe a little overvalued, maybe back it off. I mean, you had that unexpected news out of Japan on Thursday that was kind of like the final push up here, and we got the double close we talked about at the 2011 level. We'll keep an eye on that as well. So you mentioned Schwab, you mentioned some of the oil stocks. Any other specific stocks that you're attempting to build a short position in?
No, I mean, there's just stock specific. If I look at the way my book is, there's 8,700 publicly traded stocks. There's 4,199 with options. So I combine unusual option activity. So if I see big institutional buyers of puts today with weak-looking charts, then I'll look to buy some puts. Volatility is extremely low, just like the market. Totally reversed. The VIX got all the way up to 30, and then now is down in half. It's trading about 15. So I think this is a decent opportunity to get long, because if we do correct again, not only am I going to make money by being short the market, I'm going to make money by being long volatility or long Vega. Anytime I'm long put, I'm short deltas, long gamma, and also long Vega. So I'll keep an eye on it, and it's something, I'll be watching for, and I've been watching for the last 3 or 4 days, to buy puts in some weak-looking charts using unusual option activity.
Okay, and so let's talk about, back in, it's a little bit of a revisionist history now, but were you observing the options activity back when we made those lows? Was there anything that you saw in the options market that, gave you a little bit of a clue? I mean, the S&Ps, made that low. I believe it was on a Wednesday at 1813, and then gave you a shot there during the pre-market. Did you see any unusual options activity when we were trading at the lows back in October?
We've seen a lot of activity in the airline space, and I made some good money on American Airlines, AAL, and LUV. Unfortunately, I took out those positions way, way too early, but those are 2 names I'm always keeping an eye on. So when those double bottomed, just like the stock market double bottomed, we saw a lot of call activity in the airline space specifically. We've seen some call activity in some of the banks, Goldman Sachs, Morgan Stanley. So we have seen some stuff. The airlines were so weak, and American Airlines specifically went from 44 to 27. And the chart was a little too weak, so I didn't hold it long enough, unfortunately. But I did make some money off that. The airlines continue to see bullish activity, and with these levels in oil and Ebola now kind of on the back burner for now, if there's a pullback in the airlines and I see unusual option activity, I've done really well trading the airlines, so I'll continue to try to put long positions onto those.
Yeah, I mean, we did come off the lows, and then, we had the pause, and then it was, I think everyone was just waiting us for, the market to go back down, after you got that initial pause up to 1980, 1985. I mean, how did you play that? I mean, look for the pause, and then it just took off again. Did that, did it catch you at all, a little bit, unhedged? Because that, not only, you and me, I mean, that caught a lot of people by surprise when we just continued to rip back up into the 2000, through the 1990s and back up above 2000.
Yeah, I mean, to be honest, I was shorter than I would have liked to be, and I lost a little bit of money. But, like one stock I am specifically short is CMLP, which is an MLP, which went from 16 to 21, and I just thought it was up 30% for no reason, and the chart looked really weak, and I was long some upside calls, so I got short that stock against my calls kind of as a hedge, and the stock's down $1.50 since then, about 7%. So, my book is stock specific. It's not like I'm short the SPY or the S&P 500 futures. So I continue to only want to get short weak charts. I'm not looking to get short up GoPro or get short on an airline where we see higher highs and higher lows on a daily basis. So it's very, very stock specific. But, I'm looking for opportunities to press a little bit to the short side versus getting long up here. For instance, yesterday we saw a call activity in DKS, which is Dick's Sporting Goods, and they announced it. They talked about it on CNBC. But I wasn't interested in playing that just because I want to be playing more to the short side.
Okay, Andrew, and just taking a look at some of the momos here. Did you see anything in the option activity in Facebook? It got up over $80 right before earnings. There, they came out with the beat, but that wasn't good enough. Looking at a little bit of slower growth in the upcoming quarter. The street was a little bit disappointed in that. Was there anything you saw going on that maybe tipped your hand in that one?
Not really, because Facebook trades so much stock in a day. It's hard to use unusual option activity for stock. We trade a very specific trading plan for earnings, which is different. We were short both Facebook and Twitter. I had a put butterfly in Twitter that got me like 600% returns, so that was a good one. I just thought that Twitter was going to sell off. It sold off 2 of the last 3 quarters. We always look at historical movement in earnings versus and then how much they're implying it's going to move. So we did really well on those two earnings stocks specifically. Today I see some rolling over in Alibaba. Looks like it's down a little bit. I'm actually long that one through call butterflies. Also, we see it moving lower. Priceline's down about $70, and Coors is down. So Priceline and Coors has historically done really well on earnings, but I don't have a position on either of those.
Okay, and what about the Tesla monster? They're due to report soon. Boy, you talk about no love on the rally here. Tesla has not come roaring back at all here, showing a lot of relative weakness here. Any thoughts on Tesla?
Yeah, I don't have a position on this yet. I will trade it for earnings, and the way I trade it, I wait for about an hour before earnings. I look at the chart. I look at how much the stock has moved over the last 8 quarters, and then I'm looking at how much they're implying it's going to move over this quarter. So if I just brought up Tesla right here, let me just look real quick. So over the last 8 quarters, the stock has sold off twice, and it's rallied. Sorry, 3 times, and it's rallied 5 times. So it's rallied 5 times over the last 8 quarters and sold off only 3. And then I'll look at the chart, and the chart, is kind of neutral to bullish. So I want to see how the price action, price momentum is before earnings, and then I'll look to trade and make a trade on a measured move target. I don't have a position on right now. They have earnings tomorrow after the close, but I will put something on tomorrow for my subscribers.
Okay, and just to finish up here, just got to talk about Apple a little bit. Just powered ahead since earnings. Obliterated, the $100 level. Got up to I believe it got up to 110.30 yesterday. Any thoughts on that? Any reason to think that this rally is just not going to continue in Apple?
No, I mean, if you look at it, Apple's one of the best-looking charts out there, so I've been saying it for a while. I got long it for earnings. I did well for it on earnings. I do not have a position on right now. I haven't had a position on since earnings week, but I think Apple will continue to plug higher. The only reason Apple would sell off is if the market sells off, Apple will sell off with it. It talked about I-bonds yesterday. Continues to be a stock with a lot of cash, and it's like a safety play. We've seen Apple and Alibaba both kind of be safety plays to the market, where people want to park their cash somewhere. Those look pretty good. Chart looks unbelievable. I'll be looking to get long and then I'll pull back.
Okay, we've had Andrew Keene on the line. He is founder of Keene on the Markets. He's also the author of Trade to Win Using Unusual Options Activity, Volatility, and Earnings. Andrew, thanks for coming on. We'll keep an eye on your calls and hope to speak to you again soon.
Okay, thanks a lot. Have a great day.